Welcome back. You're watching CNBC TV18. As you can see on the bottom of your screen, cement major UltraTech has come out with its results. Nigel is standing by. Nigel, have you had a chance to look at the results? How do they look?
Well, Vivek, prima facie, these numbers look good. And I'll give you quick reasoning because of that. On the top line, in fact, there is a mild growth out there. And I'm going through the release that they have put out. The domestic sales volume has grown by close to around 10%. Now, that would mean that they have gained market share because the industry would have grown at around 7%, roughly, very, very roughly, 6 to 7%. So domestic sales volume has been at the upper end of what the street mentioned. Now, the EBITDA number itself is a beat by close to 100 crores in comparison to what we were working with. So the operating leverage has played out, point number one. The second factor is that they have mentioned the energy costs have been lower by close to 13% on a year-on-year basis and close to 4% quarter-on-quarter because of the decrease that we're seeing in fuel costs. So these numbers actually look good. The street, I think, was sensing them a short while back, and that's why we saw a bit of a fill-up on the stock. So top line beat by close to around 170 crores. If you look at the operating profit as well, it's a beat of close to around 100 crores, which equates to around 4.5% or thereabouts. And the key reason out there is operating leverage, as well as you have lower input costs. Just trying to pull up, the finance cost has gone up a little bit because I think they've done that acquisition with regard to India Cements. And also they've gone on to state, the expansion program is going as per schedule, and they're looking to achieve the milestone of 200 million tons capacity by the end of FY27. So these numbers look good. Just trying to pull out in case there is any kind of commentary we have got. As of now, I can't find that, but going forward, yeah, they're giving some commentary out here. Going forward, the government's focus on infrastructure as well as housing projects, together with increased rural and urban demand, is expected to generate sustainable volume growth of 7 to 8%. So there's some confidence that's coming out of there as well. These numbers look good. The street likes it, and they'll want to stick to the big boy because it's been growing better than what the industry is growing. The focus on cost as well is something that the street likes, and I think the kind of capacity that's building on is good. Prakash Diwan joins in. Hi, Prakash. Good afternoon. Good to see you in. Positive surprise coming in from UltraTech Cement, as far as the numbers that they've delivered in comparison to what my poll threw up. Go ahead, Prakash.
Oh, absolutely, Nigel. And remember, this is at a time where there's been no price hikes. There's not been much of volume increases, which were kind of expected. So from that perspective, getting these kind of numbers, and then especially it's not, if you see the EBITDA beat, the numbers are definitely a beat, and there's no one-off contributing to that. Which very clearly says it's pure organic growth, so quite positive. And the interesting part is we've been worried about overcapacity in certain pockets. Fortunately, that has not impacted most of the larger players. And if the budget were to come up with something related to capex, which spurs housing or growth in the infrastructure side, then you have a very virtuous cycle starting off from here. So well poised, and I think it's quite attractive in terms of the levels that you're getting it at now.
Okay, all right, bang on. Prakash, stay with us. Jyoti Gupta as well, Senior Research Analyst at Nirmal Bank Institutional Equities, joins us on the show. Hi, Jyoti, good to see you, and thanks a lot for joining in. What do you make of these numbers? Volume growth at 10%. They're saying that sustainable volume growth as well will be a high single digits. And the EBITDA number that they've delivered is better than what we threw up by close to around 4.5%. Your initial comment?
Yeah, hi. Thank you so much for having me on the call. In fact, I anticipated something like that. While I had built in something like a 7% growth, but a 10% number YOY growth is definitely good. And yeah, I mean, we did have price increases. Third quarter exit would be something around 150, and because of higher volumes, you do expect, the lower fixed cost absorption. So obviously, I anticipated some improvement of something like a 150 to 100 for UltraTech. So I think broadly it's in the range what I'd anticipated. So good numbers, and it augurs well for the entire industry.
All right, but I don't know whether, Jyoti, we can take it as a read-through because UltraTech has proved that it's in another league, right, in terms of the cost parameters, in terms of their branding as well. But would you read it as a positive for the industry on the whole? If yes, any particular geography?
I think I would look at more because North, if you see there, I think this growth has primarily come from North region, where the North region itself has grown by almost like 12%. and I think South gradually would pick up. So, and North continues to grow at a decent level, even in the fourth quarter. So, yeah.
Got it. All right.
UltraTech's brand is quite strong in the North region as well.
Brilliant. So you're happy with those numbers as well. Uttam Kumar as well joins us, Senior Research Analyst at Axis Securities. Hi, Uttam. Good afternoon. Numbers look good, isn't it? That's what the consensus is stating right now. The stock is flying away. Remember, it's come off, I think, close to around 10% from the recent peak. And that's given you that additional booster shot that, the street was looking forward to. Your take on the numbers?
Yeah, number is in line with our estimate and it's above consensus estimates. So we had assumed a 9% volume growth, and the company has come up with a 10% volume growth, and it's a beat on all parameters, primarily sales, EBITDA, and PAT. So numbers are good, and I hope it's a good time for cement space, and with the UltraTech leading from the front. So it's a good number, very good number.
Okay, all right. What's your official call on the stock as of now, and in terms of preference, where does it come?
It's UltraTech remains buy from our end, and with the good result, and fourth quarter will definitely be better for the cement space also, because we know fourth quarter is a time when most of the construction activities take place. So as company has also mentioned that they will be continuing with 7 to 8% volume growth moving ahead. So we believe that with pricing moving into positive territory, demand coming back, and costs are in control. So cement space looks attractive from here now.
Okay, all right. Thanks a lot, Jyoti, Uttam, as well as Prakash for joining in. So that's the numbers for you. UltraTech Cement delivers a good set of numbers, solid volume growth, guiding for good times ahead as well in terms of the volume growth. The focus on cost bodes well for them and explains why the EBITDA number is a beat of close to around 4.5%. So a thumbs up from UltraTech Cement as of now. We'll wait by for the management commentary, but you can't follow these numbers. They're a very, very good set of numbers, considering the kind of volatility that we had in the past quarter, and quarter 4 could be much better. So that's why the street likes it. I'll tell you what, we'll slip in a short break. You come back, more news and updates on the other side.